the text that is embedded for all of eternity into Bitcoin's Genesis block. Chancellor on brink of second bailout for banks back in 2009.
Back in just a sec to talk about our first story. Sound good?
Sounds good.
Let's rock. All right, first up, we got Jack Mallers, the hoodie-wearing co-founder and CEO of 21 Capital, just made one of his boldest calls yet, saying Bitcoin will 200x from here. Whoa! Speaking live on NYSE TV with Kristen Scholler, Mallers, he didn't hesitate. Asked where he sees Bitcoin going. His first answer was short and sweet. Higher, higher. Pressed for details, he added a lot higher, which frankly is the kind of technical analysis the internet and me loves. But then he dropped the headline, Bitcoin will 200x from here. Mallers laid out his logic. Global wealth across assets like equities, real estate, metals, and fine art sits around $900 trillion. About half of that, so 400 to 500 trillion, is being used as a savings mechanism. People aren't trading Van Gogh paintings for fun, they're parking money to preserve it. Bitcoin, he argued, is now competing for that exact market. Right now, BTC sits around $2 trillion total market cap, which means, in Mallers' words, in terms of purchasing power, the growth potential is staggering, 100 to 200 times from here. At the time, Bitcoin was trading at around 115K, up modestly on that day. And Mallers is basically saying, enjoy that number while you can, because he's looking at a chart with 2 extra zeros on it. And Mallers isn't just talking. His firm, 21 Capital, is already building one of the largest Bitcoin treasuries in the world. Since launching in April, it has stacked over 43,000 BTC, about 1,500 more than it originally planned. At current prices, that's worth over $5 billion. Backing him up is a list of heavyweight investors. We're talking Tether, Bitfinex, and Japan's SoftBank. Not exactly small checks, right? And to expand further, 21 Capital plans to merge with SPAC Cantor Equity Partners, paving the way to go public, which means Mallers might soon get to drop his 200x prediction in quarterly earnings calls, which analysts are going to just love. Right now, 21 Capital is closing in on Mara Holdings, the mining giant with over 52,000 Bitcoin. That puts it in striking distance to the number 2 spot on the Bitcoin corporate leaderboard. For reference, Strategy still towers over everyone with nearly 639,000 BTC, worth about $74 billion, built on debt and Michael Saylor's ability to give bullish speeches in his sleep. But 21 Capital has avoided debt so far, giving it more flexibility if the market were to go sideways. The arms race, it doesn't stop there either. Riot Platforms, CleanSpark, Hut 8, they're all stacking, and non-crypto companies are piling in too. Japanese textile group Kitabo medical tech firm, Semler Scientific, and EV maker Volcon have all disclosed Bitcoin holdings of their own. Because apparently the fastest way to get investor attention in 2025 is to add Bitcoin to your balance sheet and watch your stock ticker light up. So yeah, Mallers says Bitcoin will 200x from here, which means if you're tired of seeing 113K, don't worry. According to him, we'll be scrolling through extra commas soon enough. All right, we're bringing back Steven. Steven, Jack Mallers is out here dropping the mic with Bitcoin will 200x. When you hear a prediction that bold, do you see it as useful aspiration for the Bitcoin community, or does it risk being more hype than help? What do you think?
I love it. I love Jack, pushing the boundary, getting people thinking about where the ceiling on this asset could be. And it's really difficult for us to do, right? Most of us just look naturally at the past and at the ticker price when we're trying to figure out what Bitcoin's capable of. And so we see $113,000 Bitcoin today. All-time high was somewhere near 130,000. So it going higher than that seems hard for us. We've just never been in that territory before. But what I love about the way that Jack's putting it with 100x, 200x, and his reasons why, where he cites the various asset classes that he sees Bitcoin positioned to take market share from, what that really gets at and gets everyone thinking around is, from first principles, what can Bitcoin do? And let's think about it, not just the sticker price, but really the market capitalization. And so not just $113,000 sticker price on Bitcoin, but $2 trillion asset class today, roughly. And 2 trillion sounds like a big number until you look around at global wealth. And you look at all of these other asset classes and you see a $300 trillion real estate market and a $250 trillion bond market. And even gold is a $20 trillion asset class, roughly, today, in terms of above ground gold. And so, one exercise that I love is let's just try to take the most bearish case possible for Bitcoin. Let's say Bitcoin never eats payments, it never becomes ubiquitous for that. We're never listing the prices of items in stores in Bitcoin, it's never a unit of account. It's just a store of value. And maybe it doesn't take any market share from real estate or from bonds. Maybe it just eats gold. Maybe Bitcoin is just a better gold. That's about as conservative of a future as I can imagine for Bitcoin. And even that future, $2 trillion asset class today to a $20 trillion asset class, which is gold today, that's a 10x from where we're at right now in terms of market capitalization. That's, $1 million Bitcoin, roughly, just by being a better gold and nothing else. And I don't think it's just a better gold. I think it is on the order of 100x, 200x, in line with what Jack's saying. So it's great to see.
Yeah, it certainly seems like there is a lot of room for Bitcoin to run, considering all the things that we're seeing on the horizon here. And Mahler's, in fact, compared Bitcoin to massive savings markets like real estate, you mentioned gold, and even fine art. So from your vantage point, Stephen, how realistic is it for Bitcoin to capture that kind of global wealth? You mentioned the bear case, but bullish case, 100, 200x, do you really think that's possible?
Absolutely think it's possible and within our lifetimes. I think it could happen in a time frame that would actually surprise many people because if you look at the history of big innovations and especially systems that rely on strong network effects, you've got communications technologies like, the telegraph and the radio and the television and then the internet and then social media. And there's a great chart that kind of lays this out that makes the rounds on social media from time to time. But the adoption curve of each of those gets increasingly steep. And so, it took a while for the telegraph to go mainstream and to really impact the world. And it didn't take nearly as long for the internet to be picked up. And it didn't take nearly as long as the internet for social media and platforms like Facebook and X to really pick up. And it's because we have once you have the internet to talk about new innovations, then they can spread more quickly. And so I think the positioning that Bitcoin has, where we already have hyper connected communications globally to share information about this, and there are no gatekeepers. Anyone can buy Bitcoin. It is censorship resistant and it is unseizable once you have it. Those ingredients in an asset, I think, are a recipe for it to surprise a lot of people in terms of how quickly it could get into millions of dollars and tens of millions of dollars per Bitcoin. So it's not really an innovation that will happen at the rate at which regulators and governments believe is okay. They can influence it. They can maybe slow it down. They can speed it up. Maybe Donald Trump will do one of those two things today when he says something. Who knows? But they can't really change the end state. And if one government chooses not to do it, another can. And so the game theory can get pretty wild.
Yeah, the setup certainly seems there for more exponential growth in the future. Maybe not like we've seen in the past, which I feel like people are a lot of retail is kind of disappointed about. We're not seeing those crazy alpha plays that we'd seen, previously. But yeah, it seems like the writing on the walls there. And you make a good point, especially with the internet, information travels at the speed of how fast people can really type these days. So things are prone to accelerate a lot more quickly than in times past. And even so, you look at things like checks, credit cards, that adoption cycle itself was usually 15 to 20 years, and that was before the internet even existed. So you got to, expect Bitcoin to move a little bit faster than those old financial products of the past. And in regards to 21 Capital, They are a big player in the space just as of this year. They've stacked over 43,000 Bitcoin in just a couple of months. And for them, they haven't used any debt. And they're closing in on Mara, the Bitcoin miner, in that number 2 spot of the corporate leaderboard. So it begs the question, Stephen, do you think avoiding leverage gives 21 an edge in this corporate arms race of collecting as much Bitcoin as they possibly can?
I don't know if it gives them specifically an edge. I think that debt used conservatively, can potentially allow someone to cross the chasm into this Bitcoin future with a larger stack of Bitcoin had they not employed debt in their strategy. But of course, that increases the risk factor. And if there is a downturn, or if you get over your skis with the debt and the strategy, then things can go sideways, things can blow up. And we've seen, the roller coaster over many years in this space of firms getting too aggressive with risk management and blowing up. And so what I like is seeing a variety of strategies employed. What I like is seeing Jack and 21 Capital do things their way. You've got Strive now publicly listed, making very interesting moves. And even, as of yesterday, they announced an acquisition in all stock of Semler Scientific. And I think that is an example of how the aperture is really going to open in terms of people thinking about creative ways to acquire Bitcoin for the balance sheet, rather than just kind of the traditional moves that we've seen thus far. And so I like seeing a variety of strategies employed. We're seeing Bitcoin treasury public companies pop up in all capital markets globally. And we're going to see everyone kind of run their own little experiment, and it'll be a global contest game of capture the flag, capture the coins, and we will see what strategy
Yeah.
proves to be the best when we get to the other side.
Yeah, I mean this whole cycle for Bitcoin has been really interesting, and this Bitcoin treasury narrative has really been kind of the talk of the town. And there's a lot of differing opinions on it, right? You have people saying, well, yeah, the Sailor playbook is great, but not everybody can run that same exact playbook for a myriad of different factors. Actually, let's bring up the corporate leaderboard here, guys, on the Bitcoin treasuries chart, because as we mentioned previously, we're seeing a lot of different companies use different methods to acquire this Bitcoin. You got Strategy, of course, we got Mara, 21 Capital, Riot, Hut 8, there's a lot. So, Stephen, how do you think that this corporate stacking trend that we've been seeing in 2025 especially changes the narrative for Bitcoin compared to retail adoption that we've seen more so in the past? And, that seems to be changing now. What does that mean for Bitcoin going forward?
I think it's really healthy. I think that some enthusiasts in Bitcoin, and those who see Bitcoin as philosophical in some ways that almost implies it should not be adopted by nation states or corporates, they might take issue with what we're seeing today. But on the whole, I think it's a very healthy development. And I think it's inevitable if Bitcoin really is to become global money. If it is global money, then it will necessarily mean that the largest corporations in the world begin to adopt this first as a savings technology and eventually as a payments technology. And someday maybe we'll see them start denominating more of their contracts and issuing corporate debt denominated in Bitcoin. But really, step one of this transition or this upgrade, if you will, is get some of it on the balance sheet. Just get off of zero. And so I do think it's healthy. I actually love the correction that we saw over the last couple of weeks in Bitcoin treasury companies, just their valuations publicly. You had Naka and others that are down quite a bit off their highs, and love all the people, behind those projects. But I think that those types of healthy corrections along the way to keep just make sure that the markets are not too frothy and that this isn't some terrifying just shot up into the right. That's actually a great thing for the ecosystem and the longevity of this movement. And so I expect to see this trend continue. Something that I'm personally looking for in the next year or two, hopefully even the next 12 months, is a real household name that is publicly listed in the US adding Bitcoin to the balance sheet. I think most of the names that we're seeing on this list right now, they are very, very Bitcoin forward. Some of them have adopted Bitcoin so much they're essentially a Bitcoin company now. But what we really need to see, and I think the market wants, is a company like the Mag 7, like Meta, Google, Nvidia, Oracle, putting some Bitcoin on its balance sheet and not betting the entire company strategy on this asset, but just introducing it because their finance team recognizes that it is useful diversification and that it is an important part of their corporate treasury strategy as fiduciaries. And I think that that will be a big unlock for corporate treasurers and CFOs who are still finding excuses as to why this Bitcoin thing is for these, strange emerging companies and it's not yet appropriate for their business.
Yeah. Are you surprised we haven't seen any bigger companies like a Mag 7 company come out and actively say they're acquiring Bitcoin this cycle? I mean, Tesla was only a couple years ago. Tesla came out, they acquired a bunch of Bitcoin. Bitcoin's price shot up to the moon. Or is Tesla kind of the outlier and we're waiting for maybe one of these more traditional companies to do it so they can kind of give permission for everybody else to do it? Is that kind of what we're waiting for here? Or why do you think we've seen a reluctance of these Mag 7 companies to acquire any Bitcoin, at least publicly yet?
Yeah, you make a great point. Tesla did make a significant move and they're still holding a large chunk of Bitcoin. I believe it's over $1 billion worth of Bitcoin that still sits on their balance sheet today. And so that's healthy,
Mm-hmm.
but I think there's some fatigue a little bit from the market because they made that move years ago. They, sold a significant percentage of their original buy shortly after doing it, and then it's just kind of sat there. And so it feels like this,
Mm-hmm.
maybe whimsical Elon Musk driven anomaly rather than part of a real cohesive long-term strategy around the asset.
Mm-hmm.
And what I like is seeing companies like Block, Jack Dorsey's company, where they do a recurring purchase on a regular basis. And so it's a very cash flow centric strategy. They're not employing debt in their Bitcoin acquisition strategy. They're putting, I believe it's 10% of their profits every month from their Bitcoin business unit goes into Bitcoin that they hold on the balance sheet. And so it's this gradual accumulation approach. And I think that that is what we're going to hopefully see more of in, Fortune 500 and in the S&P 500 is companies that aren't trying to really financially engineer this. They just see it as long-term diversification and some, gradual accumulation strategy like what Block is doing will make a lot of sense. But to your point,
Yeah.
people still see Jack Dorsey as, Mr. Bitcoin. And so that is one reason they can perhaps point at as to why it's okay for Block to do it and not yet for them. So we're still waiting for that psychological validation from I think a mainstream household name to do it that doesn't have a Bitcoin persona associated.
Yeah, that makes a good point. They're not ready for another Bitcoin maxi who's like a CEO of a company doing it. Doesn't exactly move us down the pipeline quite the same way as if it's a more traditional CEO who hadn't done it before. So that makes a lot of sense. And you know, Mahler said he's saying 100 to 200x. So if we were to believe that to be true, we would eventually expect a lot of these bigger companies to likely put it on their balance sheet as well. I remember back in the day, financial advisors were telling people personally, put 1% of your net worth into Bitcoin, then put 1 to 3, 1 to 5. Now it's like up 5 to 10. Some people are even saying 15. So if we were to head toward this future of 200x gains for Bitcoin, how would you recommend the smaller players, the Main Street businesses that you're serving at Castle, be thinking about their treasury strategies today? Is it just to get started in some way, or what would you tell them right now?
Yeah, you really nailed it. It's get started. It's really just getting off zero. That is what we come back to every single day in conversation with our current customers who we're onboarding and with potential customers as we're talking to them and helping them think about this asset and strategies that they could take toward it. So it is really one of gradual accumulation, especially when you don't have the access to large capital markets and corporate debt markets that big behemoths like MicroStrategy do. It requires a lot more discipline, and your options for how you acquire this are perhaps a little bit more limited. And so, what we really encourage is just a gradual accumulation in companies that are cash flow positive. So, thinking about a percentage either of your gross revenue or of your Bitcoin, and that could be, 1% to 5%, somewhere in that range. Sounds small, but actually, if you start that today and you leave that running, and perhaps as you become more familiar and comfortable with the asset over 6 to 12 months, you can dial that even higher if you would like. We see that as just a way to really strongly position a small or medium business for this upgrade to better money is kind of how we think about it. And I think a good analog as well is the early days of the internet, where in the early 90s, you had companies that were trying to wrap their head around this new internet thing. And there was a story that they were able to tell themselves as to why this is a computer thing. This internet stuff, it seems like a computer thing. And we're not a computer company, and therefore we don't need to worry about it. And so we don't have to spend time figuring it out. But it turns out the internet was so transformative that it touched every segment of business. And so if you were one of the forward-thinking business owners who maybe was early to have a website and use email and start marketing online, that gave you an incredible leg up on all of your competition, even if you did nothing related to sort of technology per se or computers. And I think where we're at with Bitcoin is a very similar place. There's a lot of business owners out there who might think of Bitcoin as a Silicon Valley thing or a Wall Street thing. But really, it's not just for Wall Street and it's not just for Silicon Valley. Bitcoin is for Main Street. It is for all businesses. There are 34 million small and medium businesses in the United States alone. Not many of them hold Bitcoin today. Maybe 10,000, 20,000 at most hold any Bitcoin on their balance sheet, and out of 34 million. So we are incredibly early in this movement, and the earliest to adopt it, even in what seems like a small capacity today, could be very strongly positioned for the coming decade.
Yeah, I think that's really sound and pragmatic advice, and that's something I would probably recommend to anybody, not just in business, but personally, right? Dollar cost average yourself to what you're comfortable with now. See what it does for you when you're actually holding it yourself, and then you'll kind of end up orange pilling yourself in the long run, because any person that's ever owned Bitcoin over 4 years has never lost money, ever. I think that's the statistic or something. So I think that's some sound advice for your clients there, Stephen. I like it. All right, we're moving on to the next story. So hang tight there, Stephen. We're going to bring you back in a second because first, billionaire Jeffrey Gundlach, better known as the Bond King, went on CNBC to rain on everyone's parade. His take is that Bitcoin has lost its momentum and isn't a very good investment. He pointed out that gold has outperformed Bitcoin this year, which is his polite way of saying Bitcoin is falling short as a supposed store of value. He also warned that if stocks pull back, Bitcoin and Ethereum will probably fall even harder. And just in case that wasn't enough, he called crypto treasury strategies gimmicks, lumping them in with past Wall Street fads like portable alpha and the 130/30 strategies, which, let's be honest, no one outside a hedge fund remembers anyway. His verdict is that he wouldn't touch Bitcoin or corporate treasury plays with a 10-foot pole. Fair enough, but objectively, he's right about Bitcoin underperforming gold in the short term, and yes, risk assets usually fall together, but against him are companies like Strategy and Metaplanet spending billions at 116K plus a coin, showing demand is still very much alive. So is Gundlach calling it early, or is he going to be the next billionaire who tweets, should have bought Bitcoin when it doubles again? Well, I guess only time will tell. We're bringing back Stephen. Stephen, Jeffrey Gundlach, the so-called Bond King, says Bitcoin has lost its momentum and isn't a good investment. When you hear legacy finance guys say stuff like that, what's your gut reaction?
Bitcoin is no stranger to billionaires misunderstanding it. And I think that their misunderstanding is the rest of the world's opportunity. And something that is very special about Bitcoin that kind of sets it aside from other asset classes and especially other companies is that oftentimes when you have an asset that has a 100x to 200x upside potential, as Jack Mallers articulated, it's not available to the public. You have to be an accredited investor. It's a private market opportunity. You have to be a qualified purchaser. And so billionaires like Jeffrey Gundlach and, and sort of his stratum of the world, they have access to those kinds of opportunities before retail investors in the US and especially globally. But what is very unique and special about Bitcoin is that if you think that billionaires like him are wrong, you can front run him. You can buy some right now, and you can buy some whether you are a citizen in the U.S. You can buy someone if you are in. You can buy some if you're in sub-Saharan Africa, and you can store some of your wealth in this and place a bet on this billionaire perhaps not having the time or incentive to go and do a deep dive into Bitcoin the way that it deserves. And I think that history will smile upon those who who make moves like that. And so it's very refreshing that, unlike private companies where if billionaires pass in the early days, they can wait for growth stage of a company's life and then say, oh, it looks like I was wrong. And so now I'll put some in and I'll get my 5x to 20x on it, somewhere in that range. And then later it'll IPO, and later it'll become accessible to retail and the rest of the world. And then they can have it once there's no longer that big upside potential. But with Bitcoin, it is democratized in the sense of, from day one. Satoshi announced it publicly via email to anyone available and willing to listen. And there was no insider trading. There was no ICO and no investors who were given a discount or a pre-mine. And so I think it is the ultimate form of equal opportunity when it comes to this asset, and that's very special.
Yeah, and I personally can't wait for the opportunity when I can sell him my Bitcoin for 100 to 200x more than I bought it for. So, Jeffrey, I can't wait, buddy. But another thing that was interesting about Gundlach is he lumped Bitcoin treasuries in with past Wall Street fads like portable alpha. Do you think traditional finance still fundamentally is misunderstanding what makes Bitcoin different, where you have people saying things like this?
I do. I think it's a conflation of Bitcoin and crypto. And I think that it's a function of the amount of noise that there has been in this ecosystem of Bitcoin, where if you are not really doing a deep dive on it and you're not really finding the highest quality sources of content to consume, then there's all of this noise that you have to sift through with Ethereum and other cryptocurrencies and narratives about why they're all going to compete and which one is going to be the next Bitcoin. And it's exhausting. And some people just don't have the time, or their circumstance isn't such that they're able to pierce through that. And so I think that those types of treasury companies, you've now got companies that are trying Ethereum treasury strategies and Solana treasury strategies. And that, I believe, is 100% in line. I would agree strongly with Jeffrey Gundlach on this being a fad when it comes to crypto treasury companies, because I don't think you have the long-term substance and differentiation as to why that asset would really sustain and potentially have this future of encompassing more of corporate finance like you do with Bitcoin. And so I think it really fundamentally boils down to that. It's a difficulty in separating Bitcoin from the rest of cryptocurrency. And so he's, throwing the baby out with the bathwater, unfortunately.
Yeah, it almost makes me wish that there was, in fact, like a big crypto that could start a campaign, or a big Bitcoin that could start a campaign that's like Bitcoin is not equal to crypto or something, so traditional finance could really wrap their heads around that. But so far, it ain't happening. One of Gunlock's bigger warnings was that, though, if stocks were to fall, Bitcoin and Ethereum would likely fall even harder. And we're at kind of an interesting time in the Bitcoin journey, right? Because Bitcoin traditionally has been thought of as a risk asset, a risk-on asset. Money printer opens up, people start putting it in there. But we call it digital gold, right? So, Stephen, my question for you is, how do you frame Bitcoin's correlation with risk assets when you're talking to business owners or investors and into why they should be getting involved? Because, like, it's a risk asset, but we're also calling it a safe haven asset. So which is it, you know? Like, what do you tell these business owners when you're talking to them?
It's a great question, Hank. I think it really comes down to timing in the journey of Bitcoin adoption. And in its earliest days, it will function as a risk-on asset, even though it has the fundamental properties of a safe haven asset and a reliable store of value. And so there is this disconnect between its fundamental attributes and the way that it is treated by capital allocators because of how they understand it. And so thus far for Bitcoin's 16 years of life, it's been a risk on asset. My position is that it is still in that place. So if we see macro conditions deteriorate, if we see war break out somewhere, then that historically is good for gold, good for safe haven assets. I don't think Bitcoin is yet in a place where it will respond in the same way as gold, where it would respond positively to that kind of turbulence, because most capital allocators that are thinking about Bitcoin still have it kind of in the bucket of emerging technology. And it's almost hard to take it to separate it from the Nasdaq and from tech stocks and from internet stocks, because it just seems like part of that asset class. But over time, that changes. Over time, as Bitcoin proves, its resilience through global events, increasingly people will start to treat it as a safe haven. Because if you look at its fundamental strengths, its resistance to seizure, its censorship resistance, durability, portability, fungibility, all of those attributes that make it the best money humanity has ever seen, then it is like gold, but far better for those types of scenarios. It is gold that you can more easily secure and more easily transport. One of my favorite anecdotes is, so back in 2020, Venezuela had to pay in gold to Iran a sum of $500 million, and they paid it in bars of gold. So they actually took jets and a security detail and insurance, and they paid Venezuela paid Iran $500 million worth of gold for help in their oil and gas industry, for some assistance with revitalizing their refineries. And when you look at all of the risk involved and the cost involved, insurance, security detail, jets, pilots, jet fuel, the sweat that they must have been enduring when those jets are in the air and you're hoping that they make it to the other side, incredible amount of risk and cost involved in that. And that same day, back in 2020, someone transferred more than $1 billion worth of Bitcoin for 25 cents. And it took about an hour. And so when you stack Bitcoin up in that regard, and you think about it being used for, nation state settlement and interbank settlement, it is just unmatched. It is on a completely different level, and gold cannot compete one bit. But the world just doesn't understand that yet, and so it's not treated that way. But over time, we'll see more and more of this type of usage by early adopters in unique circumstances like that, and Bitcoin will come into its own in that way.
Yeah, no, you make some really interesting points there, and I wasn't familiar with that Venezuela, as you say, Iran deal, and that sounds so labor intensive to transfer all these gold bars, and frankly, it sounds like the setup to the next Ocean's 11 movie or something. They're like, we've got jets that we got to contend with that are 500 tons of gold. They're like, it sounds like a terrible heist movie that's about to begin. And to your
Totally.
point, about something we were talking earlier. It makes a lot of sense that people are treating Bitcoin as a risk-on asset because it is an emerging technology, right? It doesn't have the track record that gold has, where people around the entire world feel the safety and security that gold makes them feel. But to your point, it has a lot of the properties of a safe haven asset. So it's, yeah, to your point, going to take some time, I think, for people to start seeing it that way, even though people like you and I, the writing is very much on the wall that we know what Bitcoin is. It just isn't always being used that way by everyone yet. So well put. We got one more story I want to go over here, Stephen, and this one's a fun one, so hang tight. We're going to be with you in a second. Because first, Kevin Durant, well, you know him. He might be one of the greatest basketball players alive, but when it comes to Bitcoin, he basically pulled a I forgot my password speed run that lasted over a decade. Back when he joined the Golden State Warriors, Durant started watching crypto seminars on YouTube and decided to buy some Bitcoin. It was trading somewhere in the $360 to $1,000 range at the time. He figured that was something that could last. And then he and his business partner, Rich Kleiman, promptly lost access to his Coinbase account. Been there. They couldn't sell, they couldn't trade, they couldn't even touch it. Most people would call that a nightmare. Well, but in Bitcoin, it's called accidental hodling. Over the years, the coins just sat there quietly compounding in value. Kleiman admitted they never figured out how to recover the account, but said Bitcoin keeps going up, so it only benefited us. And now, thanks to a viral CNBC panel where Durant mentioned the lost account, Coinbase CEO Brian Armstrong decided to put on his cape and play superhero. He announced on X that he pulled some strings and fixed Durant's account recovery. Quote, "We got this fixed. Account recovery complete," which means Durant now officially has access to Bitcoin he bought for hundreds that is now worth over 13K per coin. Some reports say he bought closer to $650 a piece. Nice. And at today's price, that one coin is sitting at around 113K. So yeah, Durant's locked account turned into one of the best investments of his entire career. For a guy with $500 million in career earnings, it's not exactly life-changing, but it is proof that sometimes the best Bitcoin strategy isn't day trading, it's forgetting your password and letting number go up. All right, we're bringing Steven back. Steven, Kevin Durant accidentally pulled off one of the greatest hodl strategies ever. Lose access to your Coinbase account for a decade and then check it and see what number's at next. What does this story say to you about Bitcoin's long-term value? From 650 to 113 in like 10 years. I mean,
so many fun takeaways
good, right?
from this one. It's funny.
Yeah.
It turns out that losing access to your Bitcoin and then rediscovering that access over a decade later is a super strategy. You're going to outperform every other asset that you've got, and all of your friends too. So I am glad that Kevin Durant was able to recover access to his Bitcoin. I think it'd be a lot of fun to get some insights. I don't know if KD or his guy Rich are up for some transparency, but it'd be fun to know if that ended up being one of the best investments, maybe the best investment in Kevin's portfolio for that time period. Have to imagine that it might be on top. And I think another important takeaway is, the way in which they got it back, right? So luckily, Kevin is a high profile individual. And so you're locked out of your Coinbase account. He's got connections and visibility to get in touch with the right people. And Brian and company did the right thing and got him his Bitcoin back. So that's great. And there's a happy ending, but there are many quieter instances around the world where individuals get locked out of exchanges or exchanges go bust and who knows what happens, and they lose access to their Bitcoin. So counterparty risk is real, and it really drives home the importance of one of the mantras in Bitcoin, right? Not your keys, not your coins. And so step one is get some price exposure to this asset, even if that means trusting a custodian. But don't stop there. Keep learning, keep leveling up. And over time, if you're comfortable, you can take possession of the asset yourself. And there are great companies out there that can make that easy. And then you'll be in a place where nobody else can lock you out of your account. And that's really unique when it comes to Bitcoin relative to other assets.
Yeah. And this story I find particularly interesting because at one hand, it's a great PR piece for Bitcoin and number go up, right? A high profile athlete coming out of the woodwork saying, hey, I bought some here, look where it adds now. People love that narrative. But it also highlights something else that's a problem in the space, right? And that is the UX challenges that still exist and I think are acting as a barrier to entry for a lot of people of getting into the space, because the UX and the UI, while it's better than it had been previously, can still be very intimidating to a lot of people. You know, the wallet, sending it to the wrong wallet address. I remember when I first got into the space, it was very nerve-wracking. So when you hear stories like this, do you think this is a good PR story for Bitcoin in the sense that it highlights number go up, or is it something we should really be kind of honing in on the challenges that still persist in the space and how we can fix those going forward to make adoption easier for the masses?
Love the question, Hank, and I think it's both. I think it is fun and inspirational, and it's a good reminder that Bitcoin is for athletes. Bitcoin is for everyone. Russell Okung really paved the way with his thought leadership around the pay me in Bitcoin movement. He was formerly an NFL player for the Chargers and famously took half or more of his salary in Bitcoin many years ago, back around 2020. And now you've got Saquon Barkley coming out and doing similar things, and Kevin Durant recovering access to his Bitcoin. So I think it's really positive in that it drives home that, again, Bitcoin's not just for Wall Street, not just for Silicon Valley, it's for everyone. But at the same time, I think it is an important reminder, and we should take it as a call to action as builders in the space, as educators in the space, that we need to continue making this easier. And it is much easier today to buy Bitcoin and to safely hold it than it was 5 years ago, especially 10 years ago, but it's not good enough. And we can't stop. We have to continue building solutions, building software, building hardware to make sure that every profile of individual and entity around the world can use this in a way that is not going to be overly risky and is not going to be intimidating to them. So whether it is corporations, nation states, obviously at Castle, we are focused on that day to day with small and medium businesses. So our platform is purpose built to try to make it simple to get going so that you don't need to figure out all of the technicalities of storage and so forth on day one. But as you learn more and you progress, then you'd have the option to self-custody. And so there's that path there forward. And I think it's exciting to see entrepreneurs attack all of these different sectors and build solutions in them.
Yeah, absolutely. And I'm excited to talk about your solution at Castle here in just a second. But we are going to take a quick break first. So, Stephen, grab some water or something to drink because we're going to take a quick break with this ad. We'll be right back. When we're coming back, our deep dive with Stephen Cole right after this. So stay tuned.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
All right, welcome back. Now it's time for our deep dive with our guest today, Stephen Cole. Now, Stephen, I want to rewind a little bit. We're going to get to the beginning of this in your Bitcoin journey. So the question I always like to ask people when we first start is first impressions, like when did Bitcoin land on your radar? And what did you think of it initially? Did you buy into the hype right away, or was it like a lot of people and it took some time and some research to really wrap your head around what we were dealing with here?
Have been surrounded in my career, which was, Silicon Valley. I was living in San Francisco, working for tech startups. And so there was a vibrant tech scene around the San Francisco area, and there was a meetup on any given night for your technology of choice. And so there were Bitcoin meetups that were being hosted monthly in the San Francisco area. And a couple of my coworkers at the time were really enthusiastic about it. And it just struck me as one of those things that some of the most brilliant people in my life would not stop talking about. And so it was a signal that I needed to pay attention to this. And my background academically was computer science. So when I started to look into Bitcoin, it was very much from a technology angle. It was fascination and intrigue around the concept of a blockchain and trying to wrap my head around what is this new data structure that seems like kind of a marriage of a network and a database with an interesting set of trade-offs inherent to it. And so I would say from that period of 2013 to 2015, it was, I was buying Bitcoin and I thought it was neat, but it was very much just a novel new tech. And then 2015 onwards was when I started to consume more content that looked at Bitcoin through a monetary and economics lens. And that content was a lot of Saifedean's early writings. It was the Satoshi Nakamoto Institute. And that idea of Bitcoin's potential as sound money for the world, coupled with history about monetary competition and why, over the long arc of history, we as humans have chosen to store our wealth in certain ways, in certain regions. And so why did silver coins succeed as money and upend, seashells and wampum and all of these other things that had been used as money in certain regions? And so when I really dove down that rabbit hole, then I started to see a lot more promise in Bitcoin. And I became highly skeptical of the other cryptocurrencies where I before was very enthusiastic and I was, holding a bunch of them and thought there'd be one token for every use case. I instead started to think about it as Bitcoin having product market fit as global money for the world. And that in this new world where we are hyper connected, the idea of one global money actually makes a lot of sense. And it sounds a little scary because people think about one global money as being this centralized dystopian thing. But I think that's very different from Bitcoin. A centralized dystopian digital global money is a central bank digital currency, a CBDC, where a small group of people control the monetary supply for everyone. And we don't want that. But Bitcoin is the opposite. Bitcoin is a path of freedom and promise and equal opportunity where it is decentralized and no one can alter its rules and no one can tilt the playing field in favor of themselves. And the more apparent that that became to me, the more enthusiastic I became about wanting to dedicate my waking hours in the day towards helping people understand this and just helping foster adoption of it however I could. Began running meetup groups in the Southern California area and Phoenix, Arizona. Those meetups are still running today, and definitely have a special place in my heart for education and community building, largely because that was so valuable to me in my own journey. I think I would not have wrapped my head around Bitcoin nearly as quickly if I hadn't had access to people at meetups who knew far more about it than I did, and just the opportunity to pick their brain.
Yeah, no, that makes a lot of sense. And, Stephen, when I knew we were having you on the show, I was really excited because you have this really interesting background, having invested over 70 startups at the pre-seed stage. So you bring this unique perspective. So my question for you is, how did Bitcoin start creeping into the deal flows that you were seeing as an investor? And what did that teach you about the type of founders that you were seeing that were drawn to this space? What did you learn from those experiences?
That's been such an interesting journey for me, and partially because there has been this divide between Silicon Valley and Bitcoin. It's ironic. I don't like that that's been true. It shouldn't be true, but I think as a consequence of some of the crypto and ICO mania, which Silicon Valley bet big on and participated in big ways in, there became this divide between people who were very focused on Bitcoin specifically, and then kind of Silicon Valley VCs who were pumping and dumping a lot of crypto tokens. And I think that's unfortunate, and it's been a setback. I think we would be much further toward a Bitcoin future if brilliant firms and investors like Andreessen Horowitz and others had just been laser focused on Bitcoin and kind of stayed on the straight and narrow. And so for a while, when I was, even in 2016 and 17, I was investing into pre-seed Bitcoin only companies and trying to build a reputation as, if you are not really taking the crypto approach, but you have a long-term orientation on Bitcoin, I want to talk to you. I want to see if there's opportunity to partner together. And it's been rewarding in many ways because I've gotten to meet amazing founders building things that are super important, and a lot of the usability that we have now in Bitcoin that we didn't have a decade ago is because of builders and entrepreneurs like that. But it also ended up making me somewhat of a pariah in my Silicon Valley circles for having that focus early on. And so I think that's one area that I'm particularly passionate about trying to bridge the gap in, is really helping Silicon Valley see what makes Bitcoin different from the rest of that ecosystem. And then, on the Bitcoin side, helping them appreciate what type of, contribution Silicon Valley can make to this to move Bitcoin forward, and just have everyone work together to get us towards a bright orange future faster.
Yeah, I love that. And that makes a lot of sense. I feel like that kind of comes with the territory a little bit, at least from my point of view, that people can often conflate the problems, the perceived problems with Bitcoin as like crypto problems, but I don't even think they're Bitcoin problems. I don't think they're crypto problems. I think they're human problems that emerge through these vehicles, right? And a lot of times these other cryptocurrencies we're seeing are often these chases of people at these high alpha plays because humans are greedy by their inherent nature. That's just what we are, right? So, but Bitcoin acts a little bit differently because of the fundamentals of it compared to a lot of these other coins out here, of course, like the hard cap and things like that. So it's interesting to hear that you were actually considered a pariah back when, but now I would think that makes you seem very ahead of your time, because I think the world is starting to come around and realize that too. There's Bitcoin and then there's everything else. So with all of these experiences investing in these companies behind you, it begs the question, Stephen, what made you decide that the next chapter wasn't just going to be writing checks for these types of companies, but instead building Castle from scratch as a Bitcoin first company? What led you there?
Yeah, and I'll preface the answer to that with, I do think Bitcoin is an important part of the hard tech movement, even that we're seeing. We're kind of seeing a revitalization of industry in America and of appreciation for building hard things. It's no longer just software and finance, which have been the dominant industries for the last 50 years. We're talking about reshoring manufacturing. We're talking about building robotics and nuclear engineering and building in the world of atoms again. And I think that's exciting. I think it's important. And a big focus of my startup investing has been in that domain over the last 2 years, and trying to help founders and builders in that space see how Bitcoin stands apart from other cryptocurrencies, see that this isn't some get rich quick casino game. This is sound money as a foundation for that future that they are building toward, and helping them understand the role that Bitcoin can play in their company strategy. So getting founders of even early stage companies today that will hopefully be enormous, important, behemoths of industry in the future to think about a Bitcoin future and Bitcoin as a savings technology. And so with that backdrop, Castle, the mission that we're on is to bring Bitcoin as a savings technology to businesses across the US. We're focused on SMBs right now, so mostly cash flowing small and medium businesses. Businesses that, for anyone listening, when you drive down the street and you see billboards and you see signage for your local businesses, those are the types of businesses that we're excited to serve. And we are serving today and have been since late last year. We make it easy for them to allocate to Bitcoin by integrating with the software solutions that they already use. So we integrate with payment systems and bookkeeping systems like Stripe, PayPal, Square, Clover, etc., QuickBooks, Wave, and that list will only continue to grow over time. And so by doing that, we can enable them to get exposure to Bitcoin in a way that is right-sized for their business. We allow them to buy Bitcoin, for example, as a percentage of revenues. So, yes, you can do a spot buy through us. You can log in, you can click a buy button and buy Bitcoin for your corporate treasury, for your small business treasury. Yes, you can set up a DCA, a fixed cost recurring buy through us. But if you're in a position where your revenues maybe fluctuate a lot, and you want something that dynamically adapts, then you can optionally link up one of those systems that you already use for your business to help right size your Bitcoin accumulation strategy. And we're just really excited to try to lower the barrier to entry for business owners to be successful with this asset. We have a product that allows them to sweep excess funds from their business checking account into Bitcoin. So if you know you need $10,000 or $50,000 in your checking to run your business, cover expenses, and anything beyond that is idle capital, and it would just sit there as dollars that are leaking value, then you can define that threshold through Castle, and we will sweep the excess into Bitcoin automatically to be sure that it's being put to work in the strongest asset that it can. And we've been live since last October in a private beta sense, and it's been very rewarding to get to see the difference that it's made for restaurants, coffee shops, gyms, law firms, even some seed stage startups are on our platform, and they are doing a percentage of revenue or even a percentage of their venture capital financings are being put into Bitcoin through our platform. And so it's really exciting to see, and we think it's early days. As I mentioned earlier, there are tens of thousands of businesses at most that hold any Bitcoin on their balance sheet in the US today. And there's 34 million small and medium businesses in the US alone. So the opportunity to move Bitcoin forward and to serve these business owners, we're very early in, and that's exciting to us.
Yeah, and I think you touched on it a little bit, but so where exactly did this idea originate? Was it because you were investing in all these maybe Bitcoin first companies initially, and then you're thinking, well, a company doesn't have to be a Bitcoin company to invest in Bitcoin. So is that where the opportunity you saw laid? Was that no one was solving this problem where people thought that, well, if I'm going to have Bitcoin, it means I'm a Bitcoin company, but Bitcoin is for everybody. So did you see that gap and you saw there's only however many tens of thousands of businesses out of tens of millions, and you said, there's a problem here that I can solve? Is that kind of how Castle's origination story came to be, or?
Yeah, you nailed a lot of that. And it was in conjunction with my co-founder. So my co-founder, Joao Almeida, he actually had the idea for what is now Castle. And he and I have known each other for about 6 years. He was previously co-founder and CTO of a Lightning payments startup called OpenNode. And while, I believe and we at Castle believe Bitcoin absolutely will become ubiquitous for payments someday, and we applaud all of the work being done to move that forward. One challenge with payments is that you need both sides of the transaction to be ready for it. So you need the merchant to be set up to receive it, and you need someone to either walk into your business physically or come into your checkout flow digitally who has Bitcoin already and prefers to spend it. And we're just so early that it's really hard to get both sides of the transaction in the same place. So we started talking about, how do we just give all of that control to the business owner, where they're not dependent on the number of people who come through their checkout flow and want to pay with Bitcoin. We really just give them the tools to dial the level of exposure that they and their business have to Bitcoin with precision in a way that they can set and forget and then focus on running their core business and not have to mess with spreadsheets and manual work and logging into essentially forex exchanges to execute their Bitcoin strategy. And we also observed that the sets of tools out there were pretty well established for retail investors and traders on one end, and then, large corporations and institutions on the other end. And there is this entire middle ground of SMBs and cash flowing businesses and even mid-market corporations that have established, finance teams, where the way in which they interact with Bitcoin, the strategies they would use to accumulate it, and the tools that they use to manage their finances are very different. So we saw the opportunity to purpose build something for them. And that's really what Castle has become today. And we're excited. We opened it up to general availability a couple months ago, kind of coming out of that private beta. And so we are onboarding more businesses every week. And education is a large part of what we do. So yes, we have some business owners aboard who have been in Bitcoin for a long time, and they really just see us as automation. They see us as an efficiency gain because they already know that they want a Bitcoin treasury, but we kind of allow them to put it on cruise control so they don't have to crunch numbers themselves and look at what revenue was. But we also serve business owners who are brand new to all of this and they're figuring it out and they don't know what a wallet is or what a private key is. And so making sure that we are meeting them where they're at and building our solution to allow them to onboard without having to figure out everything on day one is a fun and important challenge for us.
Yeah, no, I love everything you're saying. I mean, especially the educational part, as both you and I know, is so important to this space. And the fact that you're literally like holding the hands of these people that are hoping to get Bitcoin on their balance sheet is just such a worthwhile endeavor. And the opportunity is clearly there. And I got to ask, while we're on it, the name Castle. What was the decision to name it Castle? What does the symbolism mean to you? Because when I hear Castle, all I think of is Nathan Fillion in that Who Done It show Castle, where he's like the author with the cop. So what was the impetus for naming the company Castle?
Oh, fun question. So originally our name was Orchestra because we kind of saw our software as orchestrating this experience across multiple systems.
Okay.
But we rebranded the Castle, and the story behind Castle was pretty fun. So we were communicating with someone via email who was asking us how we thought about Bitcoin. What does this whole Bitcoin thing represent? And we said, really, we see this as an upgrade. We see it at just like the internet upgraded our information technology. Bitcoin is an upgrade for our monetary technology. And so, rather than like dabble in it and experiment with it, it is like we are going to a Bitcoin world and we are potentially never coming back. And and so when we started to think about other upgrades over history, we were citing examples and we said it's like when we went from horses to cars, it's like when we went from typewriters to computers, it's like when we went from wooden fences to castle walls. And my co-founder and I kind of sat there and looked at each other when we typed the castle walls piece and we thought, there's something that feels good about that. That idea of protection, that idea of a breakthrough innovation in defensive technology that finally allows even a single person to protect their wealth in the most powerful way possible, on the same scale as a nation state or a Fortune 100 corporation. There is something special that resonated with us about that. And so we looked at each other and I think immediately felt like Castle's the right name.
Yeah, no, I like Castle too. It's better than Orchestra. Orchestra's not bad, but it's a little long in the tooth. Castle just kind of
It
flows
was
up
also
and
the
down
Portuguese
a little
spelling of
bit.
orchestra. It was Orquestra. And so communicating it, to business owners was a little bit of a challenge.
Yeah, no bueno, no bueno. And that's got to be a challenge on the whole for you. I mean, right, is communicating, because each business has their own set of needs and concerns and, workflows. And something I thought was interesting was you guys made it a point to plug Castle directly into things like QuickBooks and PayPal, Square, and Stripe. Why was it so important to integrate with those tools businesses are already living in when you developed Castle?
Yeah, we really see that as meeting them where they're at. And we see that, it's so easy as a Bitcoiner, I think, to forget how much we know about this world because we're so enthusiastic about it, right? I'm sure a lot of the people watching this broadcast we're consuming all of the podcasts, we're reading the books, and we're watching the news about Bitcoin. And most business owners are not. It's not on their radar, or they're so just slammed with trying to make their business go day to day to get their fresh fish for their restaurant and, or get tires in stock at their auto shop, that they don't have the bandwidth to dedicate a lot of their waking hours to this. And so we thought,
Right.
even something that sounds as small as asking them to go and create accounts in other places with custodians or with exchanges, it's actually a tall order because their time is so
Yeah.
precious. And so we want to hold ourselves to a really high standard when it comes to usability and ease of access. And so we thought, the best way to meet them where they're at is to go and integrate with the systems they already use, only have them need to create one account with Castle and nowhere else. And then by performing those integrations or making that available to them as an option, then we can just let them set that and forget it. And they don't have to manage it. They don't have to go and say, oh, business was a little slow this month, or we were actually really crushing it this month. And so therefore we're going to, adjust our fixed cost DCA or go into a smash buy. We said, let's allow them to link up so that our platform understands their business and they can define what they want their Bitcoin treasury to look like and sleep easily at night, knowing that they're not going to end up over or under exposed to this asset. And the work's not done there. It's early days for us, and we're a new entrant to this space. There's a lot of other great companies that have been paving the way in terms of usability and a Bitcoin focus that we're grateful for. But we want to keep making it even easier, and we have a lot of exciting ways that we're building towards to bring to the market over the next year in that regard too.
Yeah. And Stephen, one thing I find really interesting about you and the team at Castle is you meet a lot of potential Bitcoiners on this very important part of their journey, right? Where they're at the Bitcoin bridge, but they're not sure if they're ready to cross it. They're not necessarily sure how to cross it yet, and they need someone to help them. So when you talk to these types of clients, what's the number one thing that you're finding that they care about most? Is it inflation protection? Is it savings growth? Or is it maybe just having exposure to Bitcoin without having to really think about it? What do they seem to want?
It varies by industry, but I'll say the majority of our customers so far, inflation protection really resonates with them and is on their radar in a way that it was not at all 5 years ago. I think everything we saw, 2020 was a big moment for that when the US government whimmed $1.5 trillion into existence out of nowhere. And we saw the cost of goods respond to that, and the demands of wage workers eventually respond to that. And large corporates have all kinds of resources to insulate themselves from those effects. They hedge and they use, forex strategies and futures to make sure that the impact of inflation is mitigated on their bottom line. Small business owners don't have that. They don't have the resources. They are just hustling, and so often it will be cash in a checking account. Usually what we see is like a high yield savings account will kind of be what they use at most to protect themselves from inflation. And the percentage returns look fine on high yield savings accounts at first, but when you factor inflation into the picture, it doesn't look nearly as pretty. You start to realize that, oh, actually, you're not getting 4.25% ahead. You're actually just staying in the same place because while you're earning 4.25, the money supply is being inflated by even more than that. And so most generously, you're flat, you're at zero. Sometimes you are even falling behind by using a high yield savings account. And so we see Bitcoin as a way to give them assurances that they can't get anywhere else. You know that no one can ever dilute your ownership percentage in this asset. The supply is fixed at 21 million max forever. Today, 1,000 years into the future, when we're a multi-planetary species and we're like teleporting, by nuclear fission to using 0 point energy, whatever future you want to conceptualize, only 21 million Bitcoin in that future. And so that type of supply side assurance is just, it's unprecedented. And the opportunity to give that type of confidence to business owners that there's no funny business or shenanigans like they might be vulnerable to in dollars or in bonds is really exciting. I got a text message from one of our first customers the other day. She has a software company, and she said, she onboarded to us in October of last year. So it's been, maybe 10 months or so, not even a year in the market yet. And she said, so far I clock a 20% return. Treasury bills could never. And
Yeah.
it's that type of feedback that really hits hard in a good way for us. That is what it's all about, is seeing the impact to these business owners on their bottom line, on their ability to grow their business. And we're just in the early innings of it. So excited to do more from here.
Yeah. Yeah, absolutely. And I'll be honest, I feel like companies like yours are honestly just as important as anything in terms of helping spread maybe what would be considered the grassroots movement of Bitcoin, because it's one thing to hear about these. If I'm Joe from Joe's Pizza Shop, right, and I hear Bitcoin's being bought up by these large corporations, that doesn't mean a ton to me. But as the owner of Joe's Pizza Shop, and I find out Sally's hair salon across the street just worked with Castle, and they're now investing in Bitcoin, and they're getting returns like 20% that they couldn't have gotten elsewhere. To me, that's a lot more impactful than hearing about, Tesla buying it a couple years ago or anything else. So I think what you guys are doing over in the Castle team is really helping orange pill people the right way, slowly but surely, one small business at a time. And that has the ability to really catch fire when you start extrapolating that out over time. So that's super exciting for what you guys are doing there. And we're going to talk more about that in just a second. But first, as we're getting the end of our time here, Stephen, we're going to play a very fun game. You ready to play it with me?
Let's do it.
All right, let's get to camera 3. So here's the game. In light of kind of a Price is Right-ish, what we're doing is taking all of our favorite guests that we have on the show, and we're having them give us their price prediction for Bitcoin by the end of this year. So when the clock strikes 12, December 31st of 2025, these are some of the predictions that we think people think Bitcoin's going to be at in just a couple of months here. So here's our leaderboard currently. These are just some of the names. You can see I'm on the conservative end. I'm at 142. We have Knut Svanholm went 443. That's my favorite. But then you see we got a lot in between. Joe Burnett, I think, was around 150. So based on what you're seeing, and again, this is not any kind of financial advice, What are you thinking the price prediction will be for Bitcoin by the end of this year? Because whoever wins this and gets closest, I'm sending a Roxom Patagonia to. So what do you think? What are the tea leaves telling you?
Oh, I love these are some fun names to be stacked up alongside. And for end of year, clock strikes midnight on New Year's, Bitcoin is going to be $172,500.
Okay, 172.5. We got Stephen Cole on the leaderboard. Perfect. Well, hopefully next time I talk to you, Stephen, I will be placing a Roxom Patagonia over your shoulders. One can only hope. Let's get back to camera one here. Now, before we let you go, Stephen, we've had a lot of fun. We've talked about a lot of stuff today. One more time, I'm sure there are plenty of people in our audience, I know I am, that are curious about Castle. They want to learn more and see what it could possibly do for them and their business. If that's the case, what's the best place that I can send them to get more info on Castle and you too, because you got some great hot takes as well. So where can they learn more about you and the Castle team and what you're up to?
Yeah, thanks for asking. I'm mostly on Twitter, on X, and STHENC is my personal account. We are Save with Castle on social media, so that's our handle everywhere, including X, and that is also our website, savewithcastle.com. If there are any business owners in the US only currently listening to this who want to learn more about what we can offer and what a Bitcoin treasury strategy for their business might look like, we would love to talk to you.
Amazing. Well, guys, you heard it from the master himself, so go check it out online and see what Castle and the team over there can do for you. And Stephen, I got to tell you, you have done plenty for us on the Blockchain Report this morning. We are super honored to have you and your insights and expertise and sharing them with us today. It's been a lot of fun, and hopefully we can have you back on the show again soon, because I've had a blast. I hope you have.
That feeling's mutual. Would love to come back and appreciate you all having me, Hank.
Pleasure was all ours, Stephen, and I hope you enjoy the rest of your week, my friend. Thanks for stopping in.
You too. Thanks.
Cheers. All right, we're taking a quick break, but when we're back, we got more of today's top news stories coming up here on the Blockchain Report, so stay tuned. We'll be back right after this break.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Are you interested in effortlessly growing your Bitcoin portfolio? Duh. I mean, I sure am. The Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. Use it like any credit card. Buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee, and right now you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more.
It runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at Roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
It's too bad that I had to do these things instead of the United Nations doing them. And sadly, in all cases, the United Nations did not even try to help in any of them.
Boy, Donald looking sleepy over there. Well, President Trump, he was speaking at the UN this morning and bragging about ending 7 unendable wars in just 7 months. And he reminded everyone that the UN wasn't there for us, but still has what he calls tremendous potential. This comes as Bitcoin traders spent the last 48 hours glued to their screens, convinced Donald Trump's major speech was going to drop some earth-shattering Bitcoin policy. Instead, at the United Nations General Assembly, Trump declared, "We're in the golden age of America." Okay, he doubled down on immigration, vowing that if you come into the U.S. illegally, you'll either end up in jail or be sent back to where you came from, or perhaps even further than that. Okay, and then came the big closer. America is blessed with the strongest economy, the strongest borders, the strongest military, the strongest friendships, and the strongest spirit. A laundry list of superlatives capped off by declaring this era is the golden age of America. What wasn't mentioned, though, was Bitcoin, not a single time. Which is awkward because in the lead up, Bitcoin Twitter was fully convinced we were about to hear about a strategic Bitcoin reserve. Dennis Porter's Satoshi Action Fund was hyping massive political news. Traders were salivating at the thought that one Trump sentence could erase the $1.7 billion liquidation bloodbath from Monday. Maybe even mention of a strategic Bitcoin reserve? Nah, nothing. Instead, Bitcoin got ghosted. No Sats reserve, no policy bombshells, just patriotic chest thumping at the UN. So if you were banking on today's speech to send Bitcoin ripping past 120K again, congrats, you're still in the holding pattern, waiting for the next shiny political headline to dangle in front of the market. Because in 2025, sometimes a major speech is just a speech, and Bitcoin has to make its own headlines. And speaking of Trump, he decided that it was time to throw another grenade into the economy this past weekend by slapping a $100,000 fee on H-1B visas. Yes, the same visas that bring in engineers, coders, and doctors who actually keep Silicon Valley hospitals and half of your iPhone running. The announcement sent overseas workers into full-blown panic mode, racing to airports like it was a Black Friday at Best Buy. Companies even told immigrant employees not to leave the country because re-entry suddenly looked about as certain as a Dogecoin pump. The White House had to scramble into cleanup mode, clarifying that the fee only applies to new applications and is a one-time measure. But economists are already saying this stunt could hurt the U.S. way more than India. Atakan Bakiskan at Berenberg Bank called it anti-growth policy making, which is economists speak for, "Are you kidding me, guy?" Berenberg even cut its U.S. growth forecast from 2% down to 1.5%. And Bakiskan warned that that number might soon look optimistic if Trump keeps going down this path. The logic here, it's actually pretty simple. Fewer visas mean fewer brains. Fewer brains means less innovation. And less innovation means your productivity chart looks like Litecoin's price chart. Even Kathleen Brook, a broker at XTB, pointed out that it's not just tech giants like Apple, Amazon, and Google who are affected. Healthcare and education also rely on H-1B visas, and those industries don't exactly have $3 trillion market caps to casually burn through. Meanwhile, India sends over 70% of H-1B visa holders and has leaders at the top of Google, Microsoft, and IBM. So while the U.S. pushes away talent, India's outsourcing giants like Infosys and TCS are shrugging and saying, "We'll just shift more work offshore and send you the bill back." In other words, this isn't Make America Great Again. This is Make America Short on engineers again. And here's the kicker for U.S. Bitcoin people. Fewer tech workers in the U.S. means fewer breakthroughs, slower productivity, weaker growth, and that's exactly the kind of backdrop where people run to hard assets. Gold bugs will, of course, whine about their shiny rocks, but history keeps proving that when the system cracks, Bitcoin's the one asset that can't be outsourced, can't be visa blocked, and doesn't need government permission to exist. If Trump keeps this up, Bitcoin might be the only skilled immigrant left that America actually wants. And Jimmy Kimmel, he's back on ABC after that very brief and forced hiatus. Now, unless you live in one of the 38 cities where Sinclair Broadcast Group owns the station, of course, in which case he's not back. So your late night options are either reruns of local news or counting ceiling tiles if you happen to fall into that group. You see, Sinclair announced that it will preempt Kimmel's return and replace him with news programming, which is basically code for, "Yes, we're still mad at you, Jimmy." Disney, which owns ABC, said they had thoughtful conversations with Jimmy after his suspension for comments about Charlie Kirk's killer. Or in other words, corporate HR sat him down and said, "Jimmy, please stop making the FCC nervous." Disney decided he was safe enough to come back on Tuesday, but Sinclair said, "Nah, we're running the 11 o'clock news instead." And remember, Sinclair isn't some small town operator. They own ABC affiliates in Washington, D.C. and across the country. They were also part of the pressure campaign along with Nexstar that got Disney to pull Kimmel in the first place. Now, Nexstar, by the way, is still trying to get the FCC approval on a $6 billion deal to swallow Tegna and become the Walmart of local television. And Sinclair also wants to expand through mergers, meaning they too are on their best behavior in front of regulators. So, Kimmel's show ends up as collateral damage in a game of corporate musical chairs with the FCC. Now, here's where it gets fun for us Bitcoin watchers out there. This is exactly why decentralization matters here, folks. Legacy media is basically three companies fighting over who gets to tell you what you're allowed to hear. If you upset the wrong exec, suddenly your broadcast disappears in half the country. With Bitcoin, nobody controls the broadcast. You don't need Sinclair's blessing or Nexstar's approval. The network runs whether politicians like the jokes or not. So while Jimmy Kimmel is waiting for permission slips from Sinclair, Nexstar, and the FCC, Bitcoin keeps telling its jokes to the whole world. Uncensored, unstoppable, and still funnier than most of Kimmel's monologues anyway. I mean, that's my opinion. And in other news, Jan Van Eck, CEO of Van Eck, thinks Bitcoin can hit 400K if it captures half of gold's market cap. And honestly, the math? It maths. It checks out. Bitcoin supply is capped. Around 70% of coins are locked in cold storage, never to be seen again. Meanwhile, U.S. spot Bitcoin ETFs are vacuuming up supply like frat boys at a keg stand. Together, ETFs already hold 6.2% of total Bitcoin available. BlackRock's IBID has over 750,000 BTC worth about $84 billion. Fidelity's FBTC has 201,000. Grayscale's GBTC 177,000. Even Van Eck's own HODL ETF has nearly 17,000 Bitcoin. And the smaller ones, ARK, Bitwise, CoinShares, Franklin Templeton, Invesco, WisdomTree, are stacking thousands more themselves. So on days like BlackRock's $436 million single-day haul, ETFs are buying more Bitcoin than miners can actually produce, which means the only way to unlock coins is by raising the price until hodlers eventually cave. That's the supply side. On the demand side, Bitcoin is eating gold's lunch for them. It's easier to move, it's easier to store, and infinitely divisible. No need for armored trucks or coin dealers who smell like a flight on Spirit Airlines. Even if half of gold's $13 trillion market cap shifts to Bitcoin, you're looking at $400,000 per coin. Now, to be clear, this isn't happening next week or anything. Van Eck calls it a long-term benchmark, but they've got credibility. They filed for ETFs before anyone else, and they pledge ETF profits to fund Bitcoin core development. So while gold bugs are busy polishing their Krugerrands, Van Eck is laying out a very simple truth. The future store of value is digital. And if they're right, Bitcoin at 112K today looks like a rounding error on the way to 400K tomorrow. And it looks like 9 members of Congress woke up, looked at their retirement statements and said, you know what's missing here? A little bit of digital gold. So they wrote a letter to the SEC chair, Paul Atkins, telling him to get moving on President Trump's executive order that would let Americans stick Bitcoin in their 401ks. The order, with the very catchy title, Democratizing Access to Alternative Assets for 401k Investors, was signed in August and basically says stop treating Bitcoin like forbidden fruit and start treating it like a legitimate retirement option. The lawmakers, including French Hill, Ann Wagner, Warren Davidson, and a lineup of others who sound like they should be on the cast of Yellowstone, want the SEC to provide swift assistance to the Secretary of Labor and clean up the regulatory mess standing in the way. Because right now, 90 million Americans are still locked out of alternative assets, forced to retire on a diet of stocks, bonds, and ultimately disappointment. The lawmakers say giving people access to Bitcoin and other assets could mean a dignified, comfortable retirement. Because nothing screams dignity quite like watching your sats appreciate while your neighbor brags about his municipal bonds. Here's the kicker, though. The U.S. 401k market is worth $9.3 trillion. Even a measly 1% allocation into crypto would shove $93 billion right into Bitcoin. That's already bigger than the over $60.6 billion that's flowed into spot Bitcoin ETFs since they launched back in January of last year. So imagine the price action if millions of Americans suddenly start stacking sats through their retirement accounts. And this isn't hypothetical. Some pensions are already doing it. Michigan's retirement system snapped up $10.7 million in ARK's Bitcoin ETF in Q2 and is holding on to $15.6 million worth of Grayscale's Ethereum trust. Meanwhile, Wisconsin had diamond hands for about 5 minutes before dumping its BlackRock Bitcoin ETF shares like a hot potato. The lawmakers are basically saying it's time for the SEC to stop acting like Bitcoin is a frat party keg and let retirees get a sip. Because if Bitcoin makes it to the 401ks, it won't just be early adopters or pension funds buying more. It'll be teachers, firefighters, and that guy in your office who won't stop talking about his Roth IRA, all piling into Bitcoin. And that, my friends, is the kind of liquidity injection that makes number go up. All right, we're taking a quick break, but when we're back, we got more Blockchain Report coming your way, so stay tuned. We'll be back right after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
right, times for little tales from Hollywood. Let's see what's going on over there. Well, it looks like Bitcoin is about to crash the kids' TV market with a new anime-style series called Bitcoin Brigade Adventures in Satoshi City. Launching in fall of 2026 on Cartoon Channel, the show aims to sneak blockchain lessons into Saturday morning entertainment. The setup, Satoshi City, a neon wonderland where 5 young heroes protect the digital realm from cartoon villains. Bitcoin is the principal leader and literal embodiment of Bitcoin. Then, of course, there's BlockchainChain. That's the gentle protector symbolizing blockchain itself. Crypto Core is the inventive coder. A wild miner digs through cryptographic puzzles. And Lightning Luke is the hyperactive speedster powered by the Lightning Network. Their enemies, of course, are Forkmaster, who tries to split the blockchain with dangerous forks, and Fiat Fred, who destabilizes everything with endless money printing. Subtle storytelling. This is not. Every episode drops kids into gamified adventures where they'll solve digital puzzles, explore mining mountains, and collect rare treasures to learn about digital scarcity. Their loot gets stored in backpacks, which of course represent secure wallets. And this isn't just a TV show, it's an empire in the making. Apps, merch, games, even a Bitcoin treasury strategy. Kids will earn Satoshi Sparks for watching episodes and solving challenges. Sparks can be spent in a Bitcoin-only online marketplace full of collectibles and exclusive content. Because who wouldn't want their kid begging for virtual Satoshis instead of a Fortnite skin? There's also a licensing program for toys and apparel embedded with Lightning-enabled NFC chips. That means your child's action figures double as a lesson in wallet custody and cold storage. A companion app will give kids their own Lightning wallets, complete with parental controls, because what says family bonding better than setting a withdrawal limit on your 10-year-old's crypto allowance? The series will feature vibrant anime visuals, original K-pop music, and action-driven plots designed to make blockchain as entertaining as Pokemon. Cartoon Studios CEO Andy Hayward claims Bitcoin Brigade could have an impact on kids like Nintendo and Sega once did, which is bold considering this one stars Fiat Fred. Backing the project is Bitkern, a Swiss Bitcoin mining company, to make sure the crypto details stay authentic while the kids save the day, of course. The mission statement here is make Bitcoin less intimidating and a lot more fun while turning kids into the next generation of hodlers. So whether you find this brilliant or ridiculous, the end game is clear. Bitcoin isn't just money anymore. It's toys, K-pop, and Saturday morning cartoons. Just a little too old for that one, but we'll check it out. All right, it's time for a little AI AIO. Let's roll the stinger here, gang, and get into it. All right, let's check in on what the robots and the chat GPTs are doing today. Well, right now it appears in our state of California, a lawyer filed an appeal where 21 of the 23 quotes were fake. And not fake like taken out of context, fake like ChatGPT made them up after mainlining one too many Monster energy drinks. The court fined him $10,000, the legal equivalent of a teacher writing, "See me" in red ink, but also repossessing your car. The opinion spelled it out. Stop filing briefs with citations you didn't personally read. Or in other words, if your source is "AI said so," you're totally cooked. The unlucky attorney Amir Mostavavi admitted he didn't check the AI written text before filing. He basically said, "I didn't know it would hallucinate," which is like saying, "I didn't know tequila shots would make me drunk." The judges slapped him for filing a frivolous appeal, wasting time, wasting taxpayer money, and generally turning the court system into a Reddit thread. Mostavavi later claimed lawyers can't realistically stop using AI and said there will be victims, damages, and wreckages. Sounds less like legal commentary and more like a Fast and Furious movie tagline that we didn't know that we needed. There it is. And this isn't the first time something like this has happened either. In May, a federal judge hit 2 law firms with a $31,000 fine for bogus AI-generated research. That judge literally said they almost cited fake material in an actual judicial order, which would have been the first time ChatGPT accidentally became case law. Trackers say this stuff is multiplying. Earlier this year, it was a few cases a month. Now it's a few cases a day. And it's not even just the lawyers. Even judges have been caught citing fake cases. So, congratulations, America. We built an AI so good it can trick the people who are supposed to decide whether things are real or not. The California bar is scrambling to regulate AI. Professors are calling it an abdication of responsibility, and law schools are telling students to use AI or get left behind. So yeah, the legal system is basically saying, use AI, but if it lies, we'll ruin your career. No mixed signals there at all. All right, it's time to wrap up today's show with a little bullish, bearish, or BS, so let's run the stinger and get to it. All right, it's that time in our morning gang where we recap our top stories of the day and see how they are looking for the future of Bitcoin. Let's do it. First recap. After days of hype that President Donald Trump might unveil a strategic Bitcoin reserve, his UN speech instead focused on ending the 7 unendable wars, bashing the UN, touting immigration crackdowns, and declaring a golden age of America. Bitcoin never mentioned once. I'm calling BS on this. This was marketed to Bitcoiners as history in the making, but turned out to be nothing more than political chest thumping. No policy, no announcement, no impact, just a bunch of noise. So it was hyped as a bullish event. It delivered a whole bunch of nothing to us. It's pure BS. I don't like it. Next up, VanEck CEO Jan VanEck says Bitcoin could reach 400K if it takes half of gold's market cap. Now, with ETFs vacuuming supply and hodlers refusing to sell, the math, it's mathin', and it's not looking too crazy. I'm calling bullish on this one. I mean, institutional and conviction like this reinforces Bitcoin's long-term trajectory. Supply crunch plus ETF demand equals upward pressure on price. Maybe not tomorrow, maybe not next week, but over time, this, my friends, is what we call rocket fuel. So 400K target keeps Bitcoin's future looking bright. I like it, and I'm calling bull. Last up, we got, what do we got so far? 1 BS, 1 bull, no bear. Last up, a new anime series will feature heroes like Bitcoin and villains like Fiat Fred, aiming to gamify Bitcoin basics through merch, apps, and even lightning wallets. While this is fun, I'm calling it BS. Again, the branding is cute, but anime isn't moving the Bitcoin price chart anytime soon. We can, though, call it adoption adjacent, but for traders, this is noise, not a catalyst. However, I do like the fact that we're slowly but surely integrating tomorrow's youth into Bitcoin while their minds are still young and impressionable, so that they'll already be done with that fiat nonsense by the time they have their own checking account. So short take, it's entertaining, but zero impact now for price. But down the line, maybe. So I'm going to call it BS with some bullish undertones for the future. So today's final tally, we got 1 bullish, 0 bearish, 2 BS, which means today's diagnosis is a whole bunch of bull. Yeah, the overhyped Trump speech gave Bitcoin nothing, and while FanX 400K target is a legit long-term bullish case, it's drowned out by empty headlines and anime distractions. So the net effect, Bitcoin's day is stuck in neutral with the side of nonsense. Well, gang, that is a wrap for today's show. I have been doing a lot of talking, so I need you to do me a small favor, and if you haven't already, please feel free to like, follow, and subscribe to RoxomTV and yours truly, and Hank at RoxomTV on all platforms that matter. Remember, we are here Mondays 10 a.m. to 12 p.m. and Tuesday through Friday 8 a.m. to 10 a.m. with all of your crypto chaos and blockchain bedlam. So until next time, I want you always to stay safe, stay informed, hodl on, and I will see you boys and girls tomorrow.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about.